Hi, welcome to Let's Talk Bonds, the fortnightly podcast from INR Bonds. I'm Arjun Patsati. And in this podcast, I'm going to talk about why liquidity, and by liquidity, I mean that money is drying up for many weak issuers. This has not been a very good month, and it's not been a very good period for the bond market. We have seen a rise in short-term bond yields. In India, if you look at the very short tenor bonds like 3 months, 6 months, even for PSUs, many bond deals are higher than 3 year, 2 and 3 year, even 5 year, 10 year yields. So, just for example, NABARD, a PSU, is has issued a 3 year bond at 7.8 uh, 8% and around. But their short-term bond, which is say just 9 months or 10 months, is trading at the same level. Some of the other bonds are similar. Many other PSU bonds, many AAA bonds, all of them are now seeing that 3 months, 6 months bond deals are much higher than 3 year, 5 year, and 10 year bond deals. And this is a very classical case of a very tight liquidity conditions in the market. And short-term money is very difficult and very expensive. So top-rated borrowers are able to get short-term money, but they still have to pay high price. And also, uh, with this whole taxation law changing on MLDs, and MLDs have grown to become a very big market. We have estimated that outstandings are well over 40,000 crores. And with MLDs are becoming totally illiquid, many investors are holding MLDs that have no longer provide any tax advantage, and also a lot of selling pressure. And there have been many weak borrowers who have been able to access the MLD markets for funds. And a lot of bonds are coming up for redemptions this year. So this particular month, cost of borrowing for all NBFCs are really high. Bajaj Finance, the topmost NBFC in the country, is borrowing even 1 year money at over 8% levels. Tata Capital, again, one of the topmost NBFCs, is borrowing 1 year money at closer to 8% kind of levels. And so hence this is showing that, and this is only increasing. Banks are raising fixed deposit rate, etc. So all that is showing that short-term money is very, very expensive. Many NBFC cost of funds have risen substantially higher this quarter. This will also be shown in the weaker margins going into the for the last quarter. So NBFCs are having tough times. Now, NBFCs have also been traditionally financing lower rated issuers as well, and across spectrums. And hence, if NBFC's cost of borrowing is high and liquidity is tight, and for them to issue bonds itself is difficult, then for them to provide funding limits to other lower rated borrowers is going to get tough. Banks are anyway extremely tight on their credit deposit ratio, and they're also very going slow on credit, especially preferring to lend to the much higher rated borrowers rather than the lower rated borrowers. And so with short term money becoming extremely tight, then and liquidity money is and interest rates are rising very fast as a short tenor, then it's very expensive for any weaker borrower to raise money. And both it's expensive and it's not easy to come by. So it can lead to situations of default if it continues for longer periods of time, unless this liquidity situation eases. And this doesn't seem to be easing very soon at this point of time. So March is going to be a very difficult month for weaker borrowers. It's best that investors stay invested in PSU bonds with short tenors, or look to invest in again PSU bonds or most liquid bonds, even with 2 to 3 year maturity, with an intention to hold for over 1 to 2 years of period of time. This could give them very good holding period returns going forward, because these levels at this are very high levels and can be available for a few months only. RBI is looking to raise rates. A lot of factors that are contributing to the sharp sharp tightness in liquidity and extreme pressure on short-term rates. One is that the RBI rate hikes. Second is that the US 3 months and short-term treasury yields are over 5%. A lot of dollar flows are happening there. That is taking money out of the country. And all this is hurting the borrowers' liquidity in the country. So the situation is going to continue, and weaker borrowers may face a lot of issues, especially when the bonds come up for redemption. And they would have to be, one is manage liquidity extremely well. Uh, that's about it for now. Thank you for very much for listening in. Do follow us on all podcast channels and download our app Weekendvest for the best curated list of PSU bonds on offer. And if you're a financial advisor, obviously the best place for you is our partner portal to see the best bonds for the best levels and information, and the best bonds for your clients in every period of time. And now the best period of time to invest in this PSU bonds. Thank you very much for listening in.